Yeah, good evening, everyone. So we'll be talking about macro variables impacting capital market movement from for next week, which is 13th to 18th. One of the most important macro variables that actually already shaken the capital market and other asset market is nothing but the geopolitical development that which has happened. Now, as you may be aware that Mr. Donald Trump, who is the president of US, has already announced that he will be putting additional 100% tariff on Chinese items or Chinese goods which are imported in US from November 1st. Now, this is in retaliation of certain policies which China has propagated for rare earth magnets. Now, rare earth magnets, the production of rare earth magnets is by and large in the world is done by China. They own 97% of production of rare earth and they export around 70% of it. They have a monopoly market in this. What China has done, just to gain some kind of advantage on tariff related discussion with the US, uh, they've implemented a policy that any exporter from any of the country who is exporting any item which is having 0.1% of the rare magnet imported from China need to have a license. Also, any item which is having a rare earth magnet imported from China cannot be exported from that country to any other country for production of any kind of weapons. Now, this is a very strict control that China has already announced, and which is going to create some kind of you can say deficit of rare earth magnet across the world. One of the most important application of rare earth magnet is in EV vehicles, electrical vehicles. So this has been announced by China, and earlier US thought that they are immune to it and they are not this kind of a policy not applicable to that. But when the US authorities inquired from China and they came to know, yeah, Chinese companies application for export is also being subject to this kind of a curve from China side. So this has been a step taken by China. US has retaliated. Now the situation is that 100% tariff has been announced by Mr. Donald Trump. Now what has happened? All the assets, including crypto, including your capital market in US, has shaken, has crashed, and as anticipated, all the indexes, be it S&P, Nasdaq, Dow Jones, they have fallen around 2.5% to 4%. Bitcoins, the cryptocurrencies, Bitcoin, Solana, etc., they have actually sharply crashed by 15 to 20% minimum. China has also done one more thing, that they have sold off almost all the Bitcoin that they are having. It's been reported, however, it's not confirmed. This has created additional pressure on cryptocurrency and the people who are actually holding crypto. So this has been the problem. This has been the development till now. Now, what all this means? This means that some kind of edge China wanted to have when they were actually going to negotiate with Donald Trump in the upcoming bilateral meeting that they are going to have in Korea on trade. So they wanted to have some kind of you can say a bargain that they can have with Donald Trump, and it is in lines with what actually Donald Trump has been also doing before any kind of a bilateral meeting. So it's dose of the same medicine which Mr. Trump has been giving it to other people. Now this has been given by China to them. So all the markets have crashed. Now what after that? Coming to other factors which are going to impact. Oil, as I've already described in my last video, oil has also crashed around 1.5 to 2%, which is good for Indian market, because the lower the crude prices, better is for the market, better is for Indian market. Now coming to currency and dollar index. Obviously the volatility in the market is increasing and dollar is getting weakened. I've already spoken about this thing in my last video, that a dollar which has been around 106, dollar index which has been around 106 was at 99 something, and it has come down now to 96 or 97 levels. So weakening of dollar index means other currencies will appreciate, which means Indian currency will also appreciate, which means that Indian equity market or Indian market is going to be a good bet for foreign investors. FII DIIs flows. FIIs are continuously buying in India. However, the percentage of buying has not been that great. Still, they don't have hugely long positions in Indian market, but FIIs and DIIs flows are increasing in Indian market. US bond yield. US bond yield actually has dipped, and the interest rate. So US bond yield is dipping a little bit. I mean, in last week it was around a 10-year treasury bond for US was at 4.11. Now it is 4.07, which means that while investors are taking money out from US equity market, but they are not putting in treasury bonds. So where's the money going? Also, they are taking it out from bitcoins or crypto market. Now, where this entire money is going to be invested, whether they are going to just wait for the things to settle down or they are going to invest somewhere else, the answer is that this money actually can get invested in emerging markets. Now, there are many markets which are actually giving good hope to FII and FIIs, and one of them is India. The second factor, which all these political activities which is happening around, crashing of crypto, geopolitical movement, dollar index weakening, and so forth, the impact of all these things are going to be on the interest rate cuts. There were 2 interest rate cuts that was anticipated in this calendar year in US, but as the thing stands, I think the second interest rate cut won't be there, because if US is going to put 100% tariff on Chinese market or Chinese goods, which I think may not be finally implementable, but if there is certain increase, certain kind of volatility, definitely the market will not like it, and the US Fed chairman Jeremy Powell is not going to prematurely cut the interest rate, though he might have committed to cut the interest rate by once by 28th to 29th of October, but he may probably not go for the second interest rate cut, and this will definitely be a starting point of crash, which I've already described in my last video. So this is a very, very tricky situation. Interest rate cut are going to be deferred. Dollar index is weakening. Geopolitical risks are increasing. Also, shutdown in US market is getting delayed. Opening up of US government offices are getting delayed. The reports are not reaching to Fed chairman. The reports are not there for CPI data and so on and so forth. They are relying on only the private data. So the situation in the US is actually getting really very, 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 very tricky. So it's not good for US market. It's not overall good for the equity market. But is there some kind of a silver lining for Indian market? And I see, yes, there is a big silver lining for Indian market. Though as we talk, GIFT Nifty is already showing a 200 points down opening on Monday. But will it give a chance for Indian investor to sort of start investing or start picking it from here? My guess is definitely, but staggered buying. Not an immediate buying on the first day, because the kind of situation that is being now created in world market is not conducive for any investment by anyone in any of the markets, be it India, China, or whatever it is. This is actually not the time to put money in equity market. Gold definitely, as it is already appreciated. Yesterday also it is appreciated by 1.5%. It has already crossed $4,000. It might lead to a big rally in gold to $5,000, which is 25% from here on in next 3 months. Mainly because gold is the only asset class which is now a safe haven when it comes to dollar fluctuation, when it comes to any kind of geopolitical risk. Also, the central banks of all the markets are buying gold. So this is creating some kind of a panic buying for gold, and hence all the short positions in gold are getting liquidated. So my suggestion or my guess would be, it's still not a good time as of now for the Indian market or for any market to where an investor can actually get into and start buying. But there are certain sectors which I have spoken in my last video, which are still giving a very good bet for buying, and these are FMCG and Indian public sector units. So these are the markets, these are the segments where still the valuation is relatively moderate, not very highly overvalued, and as we speak, they are poised to give certain 12 to 15% kind of a return in next, I would say, 3 to 4 months kind of a time, because Indian consumption story is still intact. GST impact are going to positively impact consumption for India, and hence it will be very, very important to invest in this sector instead of or maybe some kind of a buying for gold is also going to sort of help investors in the short period of time. I think that's it from me in this week's assessment. The situation is extremely fluid. The situation is changing minute by minute. Tweets by Donald Trump is actually not tweets. The Truth Social, I would say, commentary or whatever you want to say, is actually creating a ripple in the market on the positive side and the negative side. China is taking a sort of a unidirectional approach to deal with Donald Trump. They are not going back and forth. They are going against him slowly and steadily, wherein they are determined this time not to give any leeway to Trump and rule the world as the way US have been doing for last so many years and even recently. So more than capital market, now the focus should be on the geopolitical developments which are happening, and a decision must be taken on basis this. But when it comes to overall investment strategy for next week, gold is still giving a good safe haven buying opportunity. FMCG and public sector units company, these are still better valued and can be bought it. I might cover some bit of geopolitical development, the economical risk in my next video, which could come in next couple of days. That will give further direction for this week or maybe next 10 to 15 days. I hope you will like this video, and please give your comments, suggestion if I can improve on. Thank you so much.